Welcome to Bitcoin Escape Plan. After reaching lower highs earlier in the month of May, Bitcoin has been dropping ever since. We are about to have a monthly close today, and in today's video, we're going to go over the key levels of support and resistance that indicate for us whether this move is going to continue to the downside or if it is just a temporary pause before we continue higher. Later on in the video, we will go over the higher time frames just so we understand the historical context of how the price typically behaves during this time of year and if we are still in alignment with the 4-year cycle. And at the very end of the video, I will go over my 4-hour break room trades, the perpetual trades. If you're new to the channel, go ahead, check out bitcoinescapeplan.com, where I reduce market uncertainty around Bitcoin with the levels that matter most. You can get started with my book. If you just want to understand how I'm able to think so clearly about Bitcoin, even with all the crazy news stories, that's how. I also have courses and a couple other goodies and the newsletter, which releases every Monday. That is tomorrow, with all the key levels that you can read in your own time. Separate from here on YouTube, where I release videos every Sunday, Monday, Wednesday, and Friday. BitcoinEscapePlan.com. All right, let's get into it. So, on the 4-hour, we've been breaking down since this point right here. This is on Tuesday, May 26th, so earlier this week. And this is where we had our last failure of 78. And just a quick recap of what we were experiencing in this drop initially. We had our failure of 82.5 for the third time that brought us down, but we initially had support at 78. We then tested support at 76. It held for a bit, but then we found 78 was resistance at that time. And then similarly, we broke down below, found 74 as support, broke back up to 78, confirmed it as resistance, and now we have been breaking down further and essentially trying to figure out, okay, what is the actual support and resistance level right now? And that's centered primarily around the key level that I talk about all the time on this channel, is 73.8K. There's certain levels that I repeat way more often than others, and that is one where it is just psychologically and historically important. That's the March 2024 ETF all-time highs. Super, super important level psychologically. We'll go over that a little bit more later on in the video. But essentially, I've been chopping back and forth in this range since about Wednesday. And at the moment, it does look like we have more downside pressure. We're pretty compressed on the 4-hour Bollinger Bands. The one thing that is important to note, you will notice this blue line over here. This is the uptrend from the 59.9K bottom in February earlier of this year. Very important. This is our first interaction with it in a long time, actually. Let me see when the last one was. In March is the last time that we interacted with it. So that's going to be pretty important data for us just to confirm, okay, does it break below that line, therefore bearish, or do we get a strong enough reaction to continue chopping up and to the right? So just to kind of analyze that in the short term, this is consolidation, especially if you zoom it out far enough. This is consolidation. I wouldn't really define that as a sincere uptrend, other than just in general, Bitcoin tends to trend up until there is severe manipulation or just like a lot of right now we're really dealing with the higher time frame being bearish, so the shorter time frame can do whatever it wants, but it doesn't matter if the higher time frame is bearish. So we have just had a break above the 4-hour SMA that showed some weakness at the 74K Fibonacci pivot. Again, what is locally important at that level, 73.8K. We then broke down below the 4-hour SMA, which is currently at 73.5K, and now we are just waiting to see whatever that next level is, which at the moment 72.9 is the bottom of the Bollinger Band. Because we are getting compression here, this doesn't always happen, but typically if we see a period of compression and a break to the top side that results negatively, we will see a reaction to the bottom side. That does not indicate that it will continue going lower from that point. It could just as easily swing back to the upside, but we will typically see a full expression when it moves like this, specifically in a period of compression. So that's something we want to look forward to. But essentially that's it. We're paying attention to that uptrend line. We are too far away from the anchored VWAPs for them to be relevant on the 4-hour time frame. If you don't know what I'm talking about, go ahead and check out courses over here where I describe that in more detail. It is worth noting that we had a reaction on the 1-hour. I believe that this is the bottom band. Yes, that is the bottom band of the downtrend anchor VWAP from the 126 all-time high in October. So that close I set on Friday that kind of like started this drop right there. You can see that was our first interaction with it after breaking down and losing it. And even where we interacted with it over here on Wednesday, pretty violent drop. Got to that level and then very violent drop once we realized that we had lost that level. So super important. Same thing, reacted negatively to the downside. We were able to get closes above it, but as you can see, same thing, broke back down below the 1 hour SMA. 1 hour SMA is currently curved to the downside. And just in general, I would keep in mind that it is a Sunday, which means we have a daily, weekly, and monthly close that all match each other. And again, the higher time frames are bearish. So it is worth noting that we have indication of that on the 1 hour, even if it's a little bit less clear on the 4 hour. We can check the daily before we go to the higher time frames. Daily's been pretty clear. This is an important thing to note about the daily in general. We can stay removed from the SMA for a long period of time on the daily. It doesn't matter if it's above or below it. It can stay disconnected from the daily SMA for a very long period of time. We are currently below it. Our most recent failure of it was on Tuesday, that big drop that we had. And it's not really looking like it's ready to test higher. Look right there, what do we have as a key Fibonacci pivot? 73.8K, that's odd. That seems similar to a level I said earlier. 73.8K is super important. It's gonna come up a million times. Like that's a really important one for you to pay attention to for the rest of the year at the very least. And then probably never have to talk about it again, but still important at the moment. So this is our monthly candle. It is important to note that, again, we had our rise up to 83. Now, I talked about a rise to 83 to 86K since January, February. I've been saying that in every video 4 times a week since January, February. So at the moment, I'm still assuming that my baseline analysis is correct, where we will now see downside pressure into the month of June. Even if we have another interaction with 76.3K before we have that, I would assume that we will have downside pressure into the month of June, probably at the very least towards 70.3K, potentially lower than 70.3K if we get a break there. That will put pressure down towards 64K. Now, I am not someone who believes that we are about to see the bottom just completely open up right now. That's not true as far as I understand of history during this time period. What we would typically expect to see is another lower high form in July. So in my mind, that means that we could drop as low as 64K in the month of June. I don't think we will retest 60K. We will then rise back towards 76.3K. And at that point, I believe we will fail 76.3K. That's my baseline assumption. Just one, looking at the historical analysis, there is a potential anomaly for this, specifically in the 2018-2019 cycle, and let's get into that now. So this is the monthly SMA. Monthly SMA is still climbing upward. Now, statistically speaking, typically when we break the monthly SMA, we have to wait a period of about 7 to 12 months before we have another interaction with it. We are now on month 6, about to start month 7. So technically speaking, it could rise. And in the instance on the chart I'm about to show you, it did do that. However, again, the probability is somewhere between 7 and 12 months. So it doesn't necessarily mean that we are ready for it right at the moment. The 2022 example, we continued to break down pretty steadily, but as you can see here, we had our high form in March, actually, not even in April. 2022 was a bit different because we had the major bankruptcies in 2022. That's when BlockFi, Celsius, Voyager all went bankrupt before FTX went bankrupt later in the year. That combined with the general hype around the NFTs at the time, like I have multiple friends who went from like never having more than $10,000 to having $600,000 worth of pictures of monkeys, you know? So like, I think that there's a reason why this one reacted so violently is there was just a level of delusion and euphoria in the market at that time that, we're not always going to be able to sustain. For now, what we're seeing with that is Kalshi and Polymarket and finding every way for you to bet on Bitcoin without buying Bitcoin, which is insane to me. That's why I made a channel about it. So our other better example is here, 2018 into 2019. So it's still important to note, we're tracking very similar to this. So we had our our rise in April that resulted in our local high in May, that then resulted in negative pressure for the month of May, that ultimately broke down into June. June found its low, which in this instance was lower than the initial drop in February. So again, we could drop below 60K now, technically speaking, if we are to follow a similar pattern in the month of June. I'm more inclined to think, though, again, it's going to go to 61 to 63 probably, show strength there, and that'll be what gives people enough confidence to have our lower high form in July. But that lower high in July will probably be slightly above the middle of the range for wherever May and April ended up, which again, I believe for me is 76.3K. That's what the chart is telling me, at least. This is only our only other relevant example. This is 2014, very similar. In this particular instance, we have our rise throughout the month of May, start to show some weakness in June, and then start to sell off in July. So for me, it doesn't really matter exactly how it plays out. Like, I don't really care if we start to see a lower high form in the end of June instead of July, and then we just drop for all of July. Like, it doesn't really matter to me. What I'm paying attention to is the pattern. The overall pattern is we form a low, we test a lower high, and then go back to form new lows. So again, here, more than 7 months. Our only short example is this guy here. It is important to note during the 2018-2019 cycle, what was going on news-wise was we were getting the first news that we were going to get ETFs. That did not happen the first time around, and then it started to fail. This is also the last time that Donald Trump was president, and just in general, typically how an oligarchy will run the economy versus a socialist economy is they want it to be less predictable. They make money off of the unpredictability and the manipulation and control of the scarcest assets. So that basically in a cycle like that, if we are to see a cycle more similar to the 2018-2019 cycle, we would expect to hit local highs quicker in the cycle than we would normally experience, and we would not get as dramatic lows as we did in 2022. Or it would again be less predictable. You know, I bought Bitcoin during this day in March or whatever when it dropped. I wish I bought $3,000 worth of Bitcoin at that time, but I bought some Bitcoin at that time, and I think anybody who understands well enough will be able to react at that moment. It's just about whether or not you have enough cash for it, which I actually have a course about. My how to trade or how to use leverage with your credit score in order to buy more Bitcoin. You can check on that in the courses tab, like I said earlier. That has changed my life, literally. Wrote a book about it. Go check it out on the website. But that's, functionally speaking, you would need to be able to deploy a lot of capital quickly in this type of regime, as opposed to a 2022 one where you got more time. Obviously, you got to wait for the violent drops, which we can go over that now. Where would the violent drops be? So again, if we're looking at it specifically from, again, we have a shooting star now instead of an inverted hammer. So an inverted hammer would allow us to potentially rise from this. A shooting star typically indicates that we are going to see downside pressure. Now, this is confirmed as well on the weekly time frame. The weekly time frame right here, we are below the weekly SMA. We do not have any instances on the chart, even though, like I said, 2018, 2019, we were able to shoot back above the monthly in a short period of time. We don't have any instances during a bear market year where we break above the weekly SMA and stay elevated above it. We have an instance in 2014 where we stay above it in consolidation for about 12 weeks. However, it did not retest and break the SMA during that time, and we've already seen that now. So again, I've been going over this in every single video. We've been chopping quite a bit, throughout this range. Like I said, 280, 83, 86. I've been talking about that forever as a point of resistance that we were going to need to see form on the chart. And now again, we had our retest below 76.3K. This is last week, or 2 weeks ago, actually. No, last week. We had our break below 76.3K. That also tested the weekly SMA, which is basically like setting a timer for how quickly it is before it's now going to drop below it. That candle, of course, enough buyers came through to close us above 76.3K. The week, however, this week, like I said, which started dropping on Tuesday, and I believe we actually lost it on Sunday, but We really started to break down on Tuesday. That's what broke us back down 76.3K, and then initially broke us down past the weekly SMA, which is currently was at the time at 74.2, is a little bit below 74.2 at the moment. And as you can see, price as I'm recording this is 73.4K. So it is lower than the weekly SMA. Obviously, we still have 7 hours left in the day where liquidity could resume. However, I think it's more likely that we're going to see downside pressure. There's a possibility that in the last hour of the day, that liquidity will return to pump the price back up slightly above this, again, the weekly SMA being at about 74.2. However, a close there that's a sincere close below 76.3K is going to be confirmed as a bearish monthly close, which will put downside pressure on the week period, and also is a failure of the 76.3K pivot, because that's where we closed the month of April. We closed at exactly 76.3K. So that's a lot of confluence between that's essentially one level. It's not even two levels. It's two important indicators on one level. So again, a lot of times it's the levels that dictate things, not the news. I don't care about the news. Like, it does not matter to me. Like, you can think that something is super bullish from the news and still lose money on it. Like, I don't think that it's relevant. I think you need to know the key levels. Again, that is why I made a channel about it. So that's what I am expecting, is in 7 hours from now, we're going to get a candle close that is either below this weekly SMA or just barely above it, but still below that 76.3K Fibonacci pivot and the 76.3K level for the monthly close, which means we will likely have downside pressure immediately starting into the month of June. And just in general in the week, I would imagine we have downside pressure. So those are going to be the most important things locally. I can go show you those other examples real quick. Where we had breaks just to see how relevant they are. Similar here, so this is 3 weeks we stayed above it, failed to Fibonacci pivot. What happened? We continued to break down lower. Let's see what happened in 2018. We had 3 closes above it. Same thing, continued to fail, didn't even hit it at the middle of the cycle. Had our lower high form in July, and then continued to break down lower. Again, this, I would think of this as 64K or 60K technically. That's kind of going to be a floor for a decent period of time until something actually allows it to drop out beneath us, which I think is going to be the stable coins personally. And then this is 2014, where we had about 12 weeks elevated above the weekly SMA, which is, again, this is our only instance in a bear market year where we have an extended period of weeks above the weekly SMA. And what happened? It still resulted to the downside. It is worth noting, this is around the time when the IRS formalized Bitcoin as property in the United States. Very important. You would think that would be bullish, correct? Oh, now there's legal classification for Bitcoin as commodity and property, right? Nope. Immediately sold off. So that's my point, is that the stable coins are bullish. The strategic Bitcoin reserve is bullish. However, if the United States government has made a concentrated effort that they want to buy more of it, why the hell would they want the price to be higher, not lower? Think, my friend. Think, Mark, think. Like, you need to be able to, like, think behind what the news story is. What were the news stations saying during this time period in July of last year? Anybody remember? Leave it in the comments down below. They were saying how Bitcoin is never going to go below 100K again. That's all that they were talking about at that time, was Bitcoin will never go below 100K again. Obviously, a sign of a top. So me personally, how I think about where we are in the cycle, if there's one news story that the news companies can run all of 2026, it is how low can Bitcoin go, period. If there's one news story for 2027 is can Bitcoin reclaim 100K? That narrative is only interesting if we already answer the question of how low it can go. I don't think 60K is a compelling enough answer for that. I also don't think it puts the ETF buyers in any pain. So it's not guaranteed that they have to experience pain in a market cycle, but typically in a Bitcoin market cycle, most holders will experience a period of pain, other than the people who bought at the literal lows. You know, the people who bought in here, like myself, like I'm not going to get to my cost basis, you know, like we're not going to drop to my cost basis for the majority of my Bitcoin, which means that at that time, wherever we do drop, which for me personally, everybody already knows this on the channel, for me personally, the lowest I can believe we're going to drop is somewhere between 34 and 39K. We have a lot of support at about 30 to 32K, really 32 to 35. We have a decent amount of support there. I was able to call out those regions ahead of time back in 2022, 2023 as well. Again, a big reason why I make this channel is for whatever reason, I just understand these patterns and I'm just trying to help people by sharing about it. I get very little from this other than the 33 views from you guys. I appreciate it. Like and comment. But basically, when we see that failure on the weekly, it's going to push us back towards 70.3K. 70.3K is the middle of this range. If we break below that middle of the range, we will need to retest 64K. So what I would expect in the month of June is that we are going to retest that 64K Fibonacci pivot. Now it is possible that we can break it and retest 60K. That would be an important psychological battle. Like if we retested 60K and showed strength, there's going to be a lot of people at that time that are convinced, oh, that's the bottom. That's the bottom. We're definitely going higher now. We're definitely going higher now. I don't think that that's the case. I really think the more times that we interact to the downside of this Fibonacci pivot, the more likely we are to test the lower one. Not guaranteed, but the same way where like if we test the higher one multiple times and fail it, that indicates that we need to head back towards the middle and potentially the bottom. So if we continue back towards the bottom and fail it, that's going to put pressure towards there unless we can reclaim back above it. And I don't really see a scenario where we just stay at 64K for the rest of the year. Everything on the chart indicates that we will probably see a lower high form between, call it June and August, you know, if you want to extend it. I think June and July. I don't think that it even, historically, August, September are like not the most bullish months for Bitcoin. So I wouldn't be anticipating that. What I am anticipating is a push towards 70.3K, where we either get one last bounce in the month of June. And this is an important lesson that you can take from May, for example, where May is now bearish, but it did not feel that way for the first half of the month. For the first half of the month, I was watching videos from other content creators who were talking about fucking bullshit claims that Bitcoin was gonna go to 100 or 110. I was getting heated during that time because it's like, there's no basis for it. There's no basis for it. There are a million different ways where you can see on the chart that 83 to 86 is important. Our anchored volume profile gets very thin between about 72 and about 86, meaning that there are not enough human beings that have strong emotions tied to these price levels. There's nobody on the other end of the buy and sell button that, you know, needs to have this level hold. That's what allows it to be manipulated easily. And it's going to put the test of conviction on two groups of people. People who bought during 2025 when they didn't really know what they were doing and they were being told it was time to buy Bitcoin. We need those individuals to not panic and for this range to not thin out as the price continues to drop now. We saw it fill out a little bit. Certainly not as much as 2025, certainly not as much as 2024. So these are all our ETF buyers for the most part. Those are those levels, as well as some of that is this year as well. But I would imagine, again, if we're going to see a traditional market cycle, that means that these people need to be in pain, even to around this point here, which is again why I think there's a non-zero chance that we see 44. I don't know if I believe it'll go lower than that because these are all the yacht club buddies of BlackRock and everybody else. So like these people are the earliest ones. BlackRock doesn't care about those. They'll take their lunch money all day. But their earliest people got in for the IPO or pre-IPO, I would imagine that those people are probably somewhat protected. That's why, again, it's hard for me to believe it'll drop below 34 to 39K because worst case scenario, those are the people who have money. So if it drops there again, they're just gonna buy more of it. You know, they're not gonna be the ones that are super concerned. So let's take a look on the 4 hour for the perpetual trades. I am in profit still. I did not panic. I just kind of left it. Now, I did not take the best entry for this guy. Anyone who's familiar with the channel or not familiar with, I guess, the strategy that I run for my perpetuals and futures trades, which you can apply to spot trading, you can really, this just works for Bitcoin. This is why I only trade Bitcoin. I don't understand why people want to trade 10 different charts where they really are only looking at 3 of them and they kind of don't know them offhand. Like, I can not look at the chart with Bitcoin and tell you what it's going to do based on key levels. Why wouldn't you want to make use of that? It's insane to me. So what we're looking for is 2 candles outside of the Bollinger Bands that are kissing, as I like to refer to it, which are just very close. They're just very close to each other. That's typically going to be our best indication of a long or a short. If it breaks to the top side, that is a short. If it breaks to the bottom side, that is a long. So why on God's green earth did I see that candle and short? Why did I do that? Now, I did that because of everything else I explained in this video, of the higher time frame context for the monthly close of May, the weekly frame context of the 76.3K Fibonacci pivot mixed with the interaction of the weekly SMA. Those are enough signs for me that, okay, we had this rise up to 83 and still had to come to 76.3K. To me, what that says is that we're going to have more pressure to go back below 76.3K, even if we do ultimately reclaim it, which again, for me, is going to be fully expressed through the month of June, all the way into the month of July. Now, it's possible that we start to see the rise in June, that it's very quick breakdown in the first half of June, just as our rise up was the first half of May. It was literally by like May 5th or May 6th that we had our highs, and then we've been consolidating and dropping ever since. So we could see something very similar in June, where the initial drop is very violent to the downside, back towards that 60 or 64K Fibonacci pivot. And then we just kind of like sit on the bottom for a little bit, and then we slowly start to rise again in July. But everything that I understand from the chart, that's what it tells me is going to happen, is that we are going to see another test of, at the lowest, 60K, probably somewhere between 61 and 63, 61 and 63 being important levels in the 2021 initial peak in 2021. So very, very important, 61 to 64 really. But I would imagine we're going to see a push towards that side of the range. Now, again, if we show strength at 70.3K, 69K being the important psychological level there from the second peak of the 2021 cycle, obviously we can bounce that. But again, we don't have any instances where we break back above the weekly SMA and then break below it and reclaim it quickly. Like, it's a long period of time before we are going to reclaim the weekly SMA if we lose it here. So again, that's our only caveat, is if somehow price is able to close above the weekly SMA, technically speaking, that will potentially give us some hope of another retest of 76.3K to the upside quickly, rather than, again, if it takes us the entire month of May, it's hard for me to believe that we're going to see that. Now, what could happen during this time is the weekly SMA itself could either flatten or curve back upwards. I don't think it's going to curve back upwards. Let's go double check that real quick. Pretty steadily dropping down this whole time. Our lower high, we don't even have a lower high in June, July. We just had a continued breakdown during that time. It just continues to break down here too. Have a rise above it, but just continue to break down. And I believe it's the same thing here. Yep. It consolidates for a long period of time here as we stayed elevated above it. But again, it consolidated because we had a period of time above it. So a consolidation where we are now is less likely if we are already back down below it. If we are already back down below it, that means technically it can consolidate, but that's only if we're anticipating that it's going to break back above it. Which I don't think is going to happen, personally. I think it's more likely that we break down to the downside, and it's possible that we never even get back to 76.3K. This is actually an important part of that explanation. I believe that 76.3K will be the resistance point of the lower high in July. That doesn't mean that we will actually hit it. It's just as likely that 73.8K could be that local top, where we're just not able to break past that, and that pushes us lower. I don't even really care if it's 70K, to be honest. The point is, it's going to be a lower high. What does that mean? It means it's going to be lower than 83K. And if it's lower than 83K, our next important level is 80K and then 76.3K. I don't think that we're going to get back to 80K. It's too close to 83K, and typically there is a larger expression between the lower highs. Again, this is just how it works in a bear market, my friends. You know, you can look at the stock market, you can look at everything else. I'm getting a lot of comments from people on Threads where they're like not focused on Bitcoin right now. It's boring. They're looking at stocks and everything else, and they're going to miss the opportunity to buy a life-changing amount of Bitcoin later this year, and they're gonna lose most of the money that they have in those stocks and everything else because they don't have a system that allows them to time it properly. That's why I made this channel, my friends, to provide you the system as far as I understand it, specifically for Bitcoin. So what I am looking at personally is I have no reason to close this short at the moment. There's potentially an argument for me to add to it. Probably, I guess, if we see another failure on 38, but I'm inclined to just let the contracts run as they are. And then I'm going to be looking initially for that reaction to, locally speaking, 72.5K. Obviously, if we get down to 72.5K and show a dramatic move back to the upside, which I don't think is going to happen personally, then I would close it on strength of that level, essentially. But I'm anticipating that it's going to continue to drop, and therefore I have really no reason to close it until we hit 64K. There's a possibility again that we could retest the lows there. That would probably be enough for me. I know Paul had said in the comments a couple times he has his short from 78K and he's just going to let it run. I don't know. I don't think you've said specifically when you're planning to close that, but me personally, what I'm going to be looking for is we have our breakdown again into June that I think is going to, at the time, bottom out. And then I do think we are going to see another rise into July. So I guess in that instance, there's not really any reason why you couldn't just have longs with your futures trades. Or again, for anybody who's not trading I'm trading on Coinbase. I live in the US, so I'm not able to trade isolated. I'm only able to have one position open at a time. But if you're trading isolated positions, then there's nothing preventing you from just opening a perpetual long as well as a perpetual short. But for the rest of us, you're really gonna have to decide, okay, do I close my shorts as we near this 64K level, and again, potentially the 60K level? Do I take those profits and reallocate them to this short-term long, where then I take a different entry? So my entry was not great. Again, my entry was 76.3K. Like, do as I say and not as I do. That's not a great entry. I just knew I was right about momentum, and I'm just allowing myself to get paid for being correct about that momentum. If I had bought up at 78 or 80, then again, my thesis is that we are not going to get higher than that, meaning that there actually would be no reason to close that short. And if anything, it would be a better instinct to compound at that short at that time. So I think it depends on your trading strategy. You know, if you're looking mostly for scalps, if you're looking mostly for swings, we are around the time of year where you can set your swings and just let them run for the rest of the year. I know people were talking shit on just waiting till October for the bottom, but at the moment, that's what it looks like, my friends. You know, unless we get a crazy, dramatic reaction to this uptrend that just allows us to continue to break up and to the right, which I don't believe personally. It's hard for me to believe that. You know, we don't have any instance on the chart where we break back above the weekly top Bollinger Band that's currently sitting at 88.5K, and it's not a bull market unless we're back above 96. So if functionally speaking we can't get back above 88.5, how the hell are we going to get above 96? So that's what I'm looking at personally, is just making sure I have enough cash to either add to this short position when necessary. I will probably try and take that upside move towards the end of June and July. I just don't know that I'm going to close my perpetual short. I may as well keep it, quite frankly, again, if everything else I said in the video is correct, that we're going to see a push past 64 towards 44. I don't know if we'll actually get 44, But that would be probably around when I would be willing to close that other trade. Very similar to like when I closed my long. I did not close that perfectly either. I think I closed that at like 77 or 78. Like I didn't actually catch all the way to 83, even though again I've been saying 83 since fucking January or February, you know. So I need to listen to my own advice sometimes. This is around when I was watching other people's videos saying that we were going to 100K, and I kind of doubted myself a little bit. And you should never do that. That's why I made this channel. Listen to the indicators, not your feelings. Your feelings are not important. Trust your feelings, young Master Jedi. All right, that's it for this video. I'll talk to you in the newsletter tomorrow. BitcoinEscapePlan.com. If you want one-on-one coaching, you can either hit me up via email or on threads in the DMs, technically on Instagram as well, but whatever you want, let me know. I'll see you tomorrow. Have a great day, everybody.